Alright, here we are, episode 3 of the ICT Mastery Mentorship. In this episode, I'm going to be going over premium and discount, or the difference between those two. Okay, so the terms premium and discount, not really a hard thing, it's just premium and discount. But the anatomy of those terms, right? Premium, whenever you hear the word premium, or whenever you hear somebody say premium, like we're in a high premium or we're in a premium right now, that means that the market is at expensive prices according to that dealing range that they've drawn. And discount is the complete opposite. Whenever someone says we're in a deep discount or we're at a discount of certain prices right now, that means, it's discounted prices, it's cheap prices, it's lower prices, okay? And let's say if you're in a discount, right, you never want to take sales in a discount because prices at cheaper prices, the market's at cheaper prices. It wouldn't want to go lower unless there is some sort of confluence that it wants to go lower. But if you're in a discount and you want to see price head up, you don't want to take sales in a discount. Like, come on, you don't want to take sales on discount. And you don't want to take buys in a premium, okay? So, for example, you want to draw your premium to discount range from swing to swing, okay? When I mean swing to swing, right? If I take off all these drawings, because I do have drawings here. And what I mean swing to swing is when one of the swings created purges liquidity and the other one purges liquidity also. So, you see how we come down and we take out those lows? Boom. We took out those points of liquidity. So this is one swing. And then if we look here on this other swing, it also took out that liquidity there. So this is our new dealing range. Right here. I threw the drawings back on there, but it doesn't. This is now our range. Let's hide it to make it easier for you. Hide, okay. So this is now your dealing range or your premium to discount range, okay? Like I said, if we are in a premium, you never want to take buys, and if you're in a discount, you never want to take sales, okay? You want to do the complete opposite for both. If you're in a premium, you want to take sales. If you're in a discount, you want to take buys. Simple, right? Now, the premium is above the equilibrium of a dealing range, okay? And if you don't know what a dealing range is or you have no clue what it is, this is a dealing range. What I just drew, that is a dealing range, okay? To swing, that's a dealing range. If I put it back, this is our dealing range, right? Above the 50% level or above equilibrium, which is this here, the 50% of a dealing range. Above that is the premium of the dealing range, okay? And below it is the discounted range of the dealing range that you're in, okay? And like I said, if you're in a premium, you want to take sales at a premium. What does price do in a premium? Sells off. Once it comes into a discount, if we draw this over a little bit, once price comes into a discount, what does it do? It heads higher. See that? Heads higher. We meander around the equilibrium. We call this point here equilibrium. It's going to meander around here. It's going to, which it did. It may just do that sometimes, and it did. But when it came into a discount, it headed higher. Okay, so we were in a premium. We dipped down back into a discount to go higher again. Okay. Now, just using dealing ranges, you might be like, "Oh, wow, this is overpowered." Nope. It's not. It's overpowered if you use it with other things to make it powerful. But just this by itself, no. This is going to give you like the foundation of where price wants to go. But you have to use other things to confirm whether price wants to go higher or lower. Okay? But using premium and discount ranges can help to see where the market is and what you will want to do. Because if we go on gold right now, right, and we look on the daily, we are at extremely high prices. If I hide all the drawings, we are literally at all-time highs. Right when you're watching, when I'm recording this video, we are at all-time highs, like literally. If I go to the weekly, we are clearly at all-time highs. We are in a premium, a high premium, a very high premium. So at this point, we want to be expecting the market to have some sort of sell-off into a retracement, or if there's something going on with economic news or some sort of news or something that's going on economically that's pushing gold up like this into such a high premium, then yeah. But from the ICT trader perspective, we want to see some sort of selling pressure. But if the confluence continuously says buy, hey, don't even try to call the top of the market. Don't even try it. Okay, I've attempted it recently, and I got cooked. I'm not gonna lie, I got cooked. Never call the top or bottom of the market. If you see the market heading up, you just follow it. Okay, just follow it. But that's according to ICT. Just follow it. And no, that's not the trend is your friend, because the trend isn't your friend. It isn't. The trend or the the program of the market or the program of the algorithm can change so fast. So don't just be like, okay, it's going up, let's follow it. No, use confluences to make sure it wants to go higher. It'll give you the information. It'll tip its hand to you. Okay? But enough of me yapping. We are clearly in a premium. We are, in super high prices. If I draw it from, I don't know where I can draw it from. Let's see. Let's just draw it from, we'll do this low here because it took out this low all the way to here, taking out these highs. So this is our dealing range here. And as you can clearly see, we are in a premium and still creating a high premium. We are nowhere in discount. We are up here. So that's what's happening on gold. But anyways, back to where we were, which is on NAS, I think. I have no clue where we were. I think we were on NAS. Oh, there we go. Yeah, we were on NAS. Okay. I think it was on the hour. But yeah, premium and discount. It'll give you the foundation of where price is and where it should go. You use other confluences in the future. You probably have no clue what a confluence is. A confluence is things that you will learn in the future. No, I'm not going to just give you the answer now because I don't want to confuse you. Just focus on this. Focus on back testing and drawing these and drawing a dealing range. Okay, a new dealing range forms when both sides of liquidity has been taken, buy side and sell side. If we look here, oh wow, sell side taken. Oh well, look at that, buy side taken. So this is a dealing range. That is your new dealing range. It's not just some random high to low right here. It's not just boom, bam. It's not that. It's not. Instead, it'll be this to this. It'll be that to that. Not here to here. Not this just random high. Not that. Because did it come and take out some sort of liquidity? Or some key point of liquidity? No, it didn't. That's just a random range that you drawn, you little retail trader. No, I'm kidding. But anyways, with all seriousness, let's draw a couple more of these ranges just to, get some practice in, shall we? Well, that's a liquidity void range I've drawn. But, right here, why not? So, if we look in this area, we see that over here, price came and took out this high here, this buy side liquidity. So if we draw here, boom, bam, prices took into liquidity there. So that's one swing. We're going to go ahead and have our fib ready. Price heads lower and lower and lower and takes out the sell side liquidity here. And whenever the last swing is created, or whenever price is done creating the range, I'm sure you understand what I'm saying, but whenever price is done heading down, creating the range, that last swing that formed when it was going lower, you want to draw from that swing to swing. If it doesn't break that swing, and as you see here, it didn't break it. It didn't break it. It created the range and then hit it back up. So this right here would be your range. And according to this range here, if we draw it out, down here, we were in a discount, okay? And if we're in a discount, we want to see price head higher, right? Did it head higher? I think so. I think so. I think so. It did. Right? It totally didn't head higher. But with all seriousness, it did. It headed higher. So if we draw another range, right? We're just having fun with this, you know what I'm saying? Nothing too crazy. We're just, having fun. Alright, here, right? Price comes up, takes out these highs here, or I think it creates equal highs. Let's really get into it and see. Nope, it came and took out that high. Yeah, it took it out, so it came and took out that high there, right? So after we see that, we want to see price come down and create a range. Did it do that? Yes, it did. Took out that high, that's buy side liquidity, came below this low, and took out sell side. So from that first swing to the last swing that was created is now your dealing range. Right there. Boom. Now, like I said, if the swing gets broken, you want to redraw. Okay? Originally, if we were watching this live, this would be our dealing range from here. But since we saw price come and break it again, come and break that swing, you want to adjust it down lower to that last swing. Boom, and there's your dealing range. Okay? And if we're in a discount, we want to see price head higher. Did it head higher? It did. It indeed headed higher. It did. Because your discounted setup formed here. You probably have no clue what just formed here. Just down, up, down, and then up again. You probably have no clue what that is. It's a break of structure setup, but don't even try to No, don't. Just stay right here, okay? Take your time. Don't be like, what the heck is a break of structure setup? I have to find it out now. No. Don't even, no. Okay, don't even do that. Don't confuse yourself, man. I'm trying to help you so you can take your time, do this at a steady pace. Don't be like, oh, JJ says something else. I have to learn this. Nope, not here. Normally I'll say do that, but not here. Not within this structured curriculum. Not here. Okay. We're gonna do one more, then I'm gonna end this episode here because it's a very simple concept. It's nothing too hard. But here, right? Price came and took out these highs, or was consistently purging liquidity, or consistently taking out liquidity. That's what purge means when it's taking out liquidity. To go in the opposite direction. That's what purge means, by the way. You will learn more about liquidity purges later. But that's what a purge is. It's consistently purging liquidity, so it's consistently taking out these highs, right? The last swing now is created from the last high it broke was right here. This is the last high broke, and this is the last swing now is created after the high was broken. So you want to get a fib, boom, you gotta add that high. Price is dumping. Uh-oh, one swing is formed. There's our dealing range. Uh-oh, price broke the swing. Where's the next swing? Right there. Boom. So that's our dealing range, okay? And for example, let's say if you wanted to see price head lower, right? What do you want to do in a discount? Okay, I said it earlier. What do you not want to do, or what do you want to do? Say both of those. Okay, so what will you want to do in a discount? That was a heavy stutter, by the way. What you would want to do in a discount is take buys or look for longs or buys. Longs and buys, same thing. In a discount, okay. But if you're in a premium, you want to take sells, correct? Correct. And what you don't want to do in a premium is take buys because price is at expensive prices. So, knowing that, if you want price to go down, you would need price to come to what? Expensive prices, right? You need price to go to a premium. Did it do that? If we draw this out, according to the fib here, did it do that? Did it come to a premium and then drop? Yes, it did. Look, came up into the premium. This entire range here is the premium. That's the premium because it is above the equilibrium. So this is your premium. Price comes up into a premium very slowly, very slowly. It takes its time. And then during New York session, you'll learn about more about kill zones later. But I'm just using the way I talk. But you don't confuse yourself. As soon as New York session came in, it dumped. Simple. Very, very simple. It's nothing hard. Then you could have used that low as your target. Bam. Simple, isn't it? Very, very simple. Very simple. Let's go over one more. Just to train your eye a little bit more, because something tells me that you haven't all the way gotten it yet. Or maybe you have. But this is a pre-recorded video, so I really can't even say that. Anyways, here we are, okay? We have this high and this low here. What does price do? Price comes down, breaks the low. Price comes up, breaks the high. Our dealing range is from this swing. The last swing now is created from the last low it broken. So this is the last low here that it broke, and that was the last swing that was created after it broke the low. Boom. Bam. You draw that out. Pow. There it is right there. Okay. Let's say you're looking for longs here, okay? Let's say you're looking for longs on this day here. Where do you want to take longs at? What side of the market? What side of the dealing range do you want to take longs or buys? It's in a discount. You want to take longs or buys in a discounted market because it's at cheap prices. So if it's at cheap prices, price has to go higher after, being in such a cheap or discounted market. Did price do that? Let's take a look. Let's analyze here. You probably already saw it. Look at that. Price came into a discount, and what did it do? That's amazing, isn't it? Very amazing. See that? That's incredible. Comes down into a discount. It's like, oh, bye, we're leaving you, and it goes. It's gone. Isn't that amazing? That's truly beautiful, isn't it? Truly beautiful. All right, and even again, this low here. This is the last low it broke. That's the last swing after the low was broken. So if we do boom, all the way to bam. This was the last swing that was created after it took out these highs here. So that's your last swing. And let's say we were looking for longs here. We want to, look at our discount. What did price do? Price came and, tested the discounted market or discounted prices twice. And what did it do? It headed higher. And in a discount, what do you want to do? What would you want to see price do? Head higher or lower? Higher, because it's in a discount. Came to a discount, boing, boing, and then it head higher. Amazing, isn't it? Very amazing. Very, very amazing. I'll say that myself. It's very amazing. But I'll end this episode here. I don't want to make it too long. I don't want to make this a 40-minute episode on yapping about premium and discount because it's not a hard concept. But anyways, here's your homework for this episode. Go on TradingView or Traders Casa, the platforms I gave you in the core basis curriculum. Go on TradingView and you don't have to have replay mode or anything. Just go and do hindsight. Go on hindsight and draw these dealing ranges from swing to swing, from liquidity point to liquidity point, and draw these dealing ranges and see how price uses them. Okay. Nothing hard. Nothing hard. Okay. Nothing hard. But that's your homework. Go do that. You don't have to do it for a long time, but until you get it, until you have, some sort of, the grasp of what premium and discount dealing ranges are, then yeah, you got it. But that's your homework to, practice this. But anyways, I'll be in this episode here. Episode 4 coming out soon. I'll see you in the next episode. Peace.